Welcome back. Well, it's the tax and capital market discussion full throttle because not in the recent past have we had a budget that is so heavy on taxation that directly impacts the capital market. We've got changes in STT, we've got changes in the long-term capital gains tax regime, as well as, of course, what's happened with buyback. So let's discuss all of this one by one, and we have a full house for that. We have Mr. Dhiraj, Relli, MD and CEO at HDFC Securities, who's, of course, representing the broker fraternity. We have Deepak, Shenoy, founder of Capitalmind, who's the voice of the investor. And we have Girish, Vanvari, founder of Transaction Square, who's the tax expert, of course, on the panel. Gentlemen, thank you very much for joining in. Great to have you on. I want to start with STT because yesterday all the limelight was being hogged by, I think, buybacks and LTCG. So on STT, Mr. Relli, if you could open the floor, because I think going into this budget, the whole hype and hoopla was around curbing speculation. The STT hike has come in on futures and options. It's a big hike, I think as much as 60%. What's the impact?
So first of all, I want to clarify everyone that this hike will be applicable from October 1st and not with immediate effect. So that's something, there was a confusion yesterday, but now we have a clarity on the same. You're right that this is a significant increase in the transaction cost for the traders and investors. So to that extent, it will have its own impact on the volume. We did some maths to check how much will be the impact if on sale of securities options. You will have impact of almost 50%. And if we include sale and purchase both, because STT is applicable only on the sell side and not on a buy side, the impact will be almost 21%. So 31% impact on the sell side of the transaction, 21% impact on the sale and purchase both leg of the transactions. This is in the case of sale of options in securities. If we talk about the futures, I think the impact is slightly higher. Impact is 50% on sell side of the transaction. And here the STT is charged on the contract value. And in case of options, it is charged on the premium. If we include sale and purchase both transactions, the impact will be 39%.
Okay, so could you just, for our benefit, repeat the numbers, I think, and let's start with options because that's where the whole discussion is. On options, you're saying that it's 31% and 21%. Is that right?
Yeah. So let's look at option premium of premium value of 1 crore. In the 1 crore, the transaction charges will be 4950. That will remain the same. We are assuming that the transaction charges will remain same. In fact, you must notice that this is also up for a revision effective October 1st. This will revise downwards, but we don't have any visibility as of now. That's where, for the purpose of calculation, we are taking 4950 per crore as the same charges for the exchange charges. And we are keeping all other charges same, not taking any charges impact of the brokerage. So we are just calculating the impact of the STT only. So STT on 1 crore premium value earlier in the old taxation was 6,250. Now it will move to 10,000. So this would translate into an impact of 31%. And if we include both sides of the transaction, sell and buy, this will be an impact of 21% because the charges will remain on the buy side of the transaction, which is 6163 per crore.
So Girish, you have a pulse of the market. You speak to all the clients who trade with you all and do brokerage. Do you think it's a sizable increase we're talking about? Will it curb speculation on F&O, to your mind?
And this is not the only thing. There are three things to be considered. First was the size of the F&O, which got increased. SEBI's proposal to make from 5 to 25. Second was the margin trading restrictions of 1,000 stocks, which could not be pledged. And third is this. You add the three up, people are nervous. And today I was just speaking to people. Today, if you sell, square off your positions, if you sell your MTF positions, effectively you're paying a higher capital gains tax too of 20%. So really, to sell or not sell also is a big question, because should you book a gain, which is at 20%, because many of these scripts have also gone up. So it's going to impact the market.
So, Deepak, come in on this. I think the numbers Mr. Relli has given us. The question is, Does it curb speculation? It's a big hike. He's put out the numbers, 21% to 31% on options. The tax itself has gone up by 60%. Does it curb speculation?
No, I think the problem with speculation is not the people who pay 1 crore in premium. They are relatively small in numbers. So take a person who pays 1 lakh rupees in premium, which is probably still the higher end of the speculatory. Speculation is not bad. It is this unbridled gambling that is bad. And a lot of people look at speculation as gambling, but it's not. In the stock market, there is difference between a casino and the stock market is the stock market. The house does not take all the winnings. The winnings are, you can be a winner regardless. In a casino, if you win consistently, they'll throw you out. In the market, you can win consistently and continue to exist and be there. The problem with speculation is usually the small person who does not have too much money leverages themselves by taking a loan and then leverages themselves in the market as well. So on 1 lakh, the difference is maybe 30 rupees. Now, for a lot of people, this 30 rupees is not meaningfully different, or maybe, I don't know if it's 30 or 300. I think it's 30 rupees. But the actual numbers is not so meaningful that people will get deterred by STT or by a larger capital gains tax, because if they were making profits, then they would be worry. But then the problem, as stated, is that the speculation is bad only because a lot of people lose money. If they're losing money, they're not paying taxes on that money at all. But I think the STT itself is not meaningful. It will hurt non-speculatory activities, such as even arbitrage funds, who will see a 20 to 25 basis point decrease in their yields simply because of the higher STT on futures. But the options piece, I don't think it will curb speculation meaningfully. It's just, there's a lot of money being made in options, a lot of transactions happening in options. The government's like, if you guys are willing to pay, I might as well charge a little bit more, and let's see where you stop playing this game.
It's the golden goose, right? Laying golden eggs right now. Dhiraj, come in. Your view. In absolute numbers, it doesn't appear to be significant, though in percentage terms, it does look like a very significant increase. Will it curb speculation?
So Deepak is absolutely right. Even if we do the math on a 1 lakh option premium, the current cost is government charges are 90 rupees and it will move to 27. So it's almost an increase of 30 rupees only, 37 rupees what Deepak has mentioned. See, you have to take this into account that these transactions are done on a wafer thin margin only. So to that extent, it will have its own impact. It's not just a sentiment impact, it's also the real math, real gain or loss impact for the investors. And if you look at the overall F&O volume, 50% of the volume is done by the prop traders as well as arbitrageurs. So particularly they operate at a wafer thin margins. So to that extent, when their impact cost will increase, the transaction cost will increase, there we will see the impact of the volume. And I also echo the sentiments expressed by Girish. It's not just the impact of the transaction cost attributed to the securities transaction tax, but also the overall action taken by the regulators also. And there are more action on the anvil. We will see that there will be more actions coming in the forms of some more radical changes in whether how many expiries per exchange can be there, or maybe a lot size can also go up. So if it's the culmination of entire impact, I think that will definitely address the speculative activities in the F&O space.
Okay, got that. So let's see. Maybe this is not the end of it. This is just from the tax perspective. Let's see what SEBI now, what prescriptions SEBI finally prescribes. Gentlemen, let's move to the next issue, which is buyback tax. That got a whole lot of debate going yesterday as well. Now, first of all, let's get clarity from Girish. Girish, the interpretation that I got was it's very simple. The arbitrage between dividends and buybacks goes away. Dividends were being taxed in the hands of the recipient at the slab rate. And now the same will happen for buybacks. Tell us if that's right. And I think the price of the share, that can be taken as a capital loss, which you set off against a capital gain. But basically, is there any arbitrage left at all?
Actually, I want to twist this. Clearly, if you look at it purely as dividends and buyback tax, which is 20% versus a dividend tax of 35%, you can say the arbitrage has gone away. But if you put a treaty into play, let's say foreign companies investing through Singapore or Mauritius or directly through Netherlands, UK, the answers may be different. Actually, they'll come under dividend taxes. In Mauritius, the dividend tax rate is 5%. In Netherlands, it's 10%. You may have a better answer to yourself. Then you twist it even further. You look at open market purchases for buyback. You look at tender offers in buyback. Tender offer in buyback, I understand the law is very simple. Now to be taxed in the hands of the respective shareholder at his rate. But look at open market purchases. If you do open market purchases, you will sell on the stock market paying STT. You don't know when the company is gradually buying. And when you pay STT, you'll pay 12.5% depending upon long-term, short-term. And then the company will also argue no taxes. So if you were doing open market purchases, can you actually say there is no tax on buyback now? Because you'll anyway pay the lower amount of capital gains tax. And to the company, there is no buyback tax. So really, this whole section needs to think. Other queries which I'm getting today and yesterday is that what about buyback announced? At what point of time will this be applicable? The law says it's applicable effective October 1, 2024. Now, one is the announcement of buyback, board resolution for buyback, shareholder resolution for buyback, if applicable, opening of the tender offer. At what point of time do we have to look at October 1? What happens to shares tendered before October 1? It's clearly under the old law. Shares tendered after October 1, after the it's as per the new law. What does tendering means? Tendering means what is the point of time? It's the point of time when the company accepts the buyback.
No, fair enough. Girish, just to clarify, making it very simple for viewers who are watching, as per the new law, as per now the way things stand, when there is a buyback that's happening through the market route and I'm tendering in my shares, first of all, I have to pay STT on that trade. I'll have to pay capital gains, which is long-term or short-term. And then when the company eventually gives the income back to me, which is now going to be dividend income, then I have to pay tax at my slab rate, right? So that's 3 taxes.
No, so when you offer it for buyback, when you give it in your tender process, there is no tax because you're tendering the shares to your company. So there is no tax on that point of time. When you get the money, when the company accepts your tender and gives you the money, at that point of time, you pay dividend tax. And afterwards, because you have tendered your shares and got money and paid dividend tax, there's a capital loss in your hand, which you can set off. So at the time of offering to tender, there is no tax. When you get the money, there is tax.
Got it. And that will be at your slab rate. Deepak, this entire buyback is a critical issue for IT companies because they annually give you a buyback and most of the large cap IT companies have very high promoter holding. So give us your take on this entire buyback versus dividend.
So Reema, nobody's going to do a buyback anymore. I think that's just very clear. I would, as a promoter, absolutely not do it. The only people who benefit from buybacks now are mutual funds. And insurance companies or pension funds and so on who are not who don't pay tax, right? So if I was the promoter of a company and I had to pay I had to participate in a buyback, I would have to pay a certain amount of money to buy back my shares. From April 1, by the way, there's no open market buybacks allowed at all. The buyback regulations have changed to only allow tender buybacks after April 2025. Right now, there's a small window till then. But then, the buyback concept was instead of paying a dividend, I'll do a buyback, and then the cost is roughly the same. The company pays the tax of 20%, and people get it tax-free in their hands, which is actually worthwhile for a lot of promoters to be able to take money, whether it's a TCS, the Tata, and by the way, we have a holding there. But TCS gets a significant amount of its money from TCS. Tata Sons gets its money from TCS in the form of dividends and buybacks. But why will they take money, pay 39% on it, and have this large amount of money lying around as a capital loss, which may not even be a large amount of money simply because they might have bought the shares at a much lower price. Yeah. So
on the whole,
so how do you repatriate income? If you have to do either dividends or buyback, so what will companies do?
Dividends. Why not?
Dividends.
Okay.
It's a lesser problem.
So if earlier, suppose, a company was doing 1,000 rupees worth of buyback, now the amount that they will give, considering all the taxation, will be lower than 1,000. Because one reason for buying IT companies was also the kind of return that they give back in the form of dividend or buyback. So will that be lower?
I think it will be 1,200, because if they did a buyback at 1,000 crores, they had to pay 200 crores as tax separately, right? So they were actually distributing 1,200 crores. 200 was going to the government. Okay. Now they have 1,200 to distribute. They will distribute the whole 1,200 as a dividend and leave it for you to pay the taxes.
Okay, all right. We have to pay the taxes. That's the bottom line. Come what may, and whichever format they might take. Gentlemen, thank you very much. We're out of time, but definitely not out of questions. These are complex issues, and I think we'll have more of these conversations to get further clarity. Thank you very much, Mr. Relli, Girish, Deepak, for joining in and demystifying some of these taxation points for our viewers. Right now, take a very quick break. We'll come back with a lot more on the other side, including several stocks that are in focus today.